in the understanding of the Chinese economy and its contribution to the discussion of issues of importance, not only to Australia, but more broadly of the international intellectual community and developments in China. Lost and begun were the founding fathers of this effort. And it's a really important thing to elevate at this time and to continue going forward. So the also remarks made in the opening session about how important China aid is to international discussions of what's going on in China. There's been a remarkable transformation in the fortunes of the Chinese people since this update began. And of course, a remarkable transformation in the Chinese economy and the welfare of the Chinese people. This update series has traced those developments over this last quarter century, so an ever-changing quarter of a century, if it was one, importantly because of China's role in world affairs and world economic affairs in particular. I think in respect of the topic we're discussing today, the digital transformation in China, it should be compulsory for everyone outside China to go to China and see what the impact of the digital transformation of the Chinese economy has been, not only on Chinese industrial competitiveness, but also on the day-to-day welfare of the Chinese people and all the Chinese people have access to this transformation too today. China has been remarked in the earlier session, over 1 billion users of the internet, about 1.2 billion users of the internet. It has a remarkable technology in digital technology adaptation. But we're going to explore what the limits for that have been in some of these discussions, particularly in this session, and where the challenges remain for China going forward in the application of digital technologies in the digital economy. We're only, in that sense, at the beginning of the digital age. And our conversation, I hope, will focus importantly on what challenges China faces in the next phase of digital economic development and how that will impact upon the rest of the world. The challenges of a rapidly declining workforce, as was noted by at least three of our speakers this morning, the challenges of a rapidly declining workforce puts much emphasis on productivity advance and particularly through digital technologies and lifting growth as population and workforce shrinks in China, as it is in many other parts of the world. Similar challenges that we face in the developed world are faced in China, but China's an economy that has been remarked for that's grown old before it's grown rich. So there's a particular importance to this challenge in China. In this session, we're going to look at the relationship between China's economic growth and digital transformation. We have an excellent panel, 3 speakers. The first, Harry Xiaoying, who will look at the role of the digital economy in Chinese economic growth and explore the contribution that the digital economy has made to economic growth in recent years and where the weaknesses lie in that process. Harry is a professor in the National School of Development at Peking University. Earlier held a post at Hitotsubashi University, my old university in Japan, in the Institute of Advanced Studies there at the University, and has played an important role in exploring productivity growth in China through its association with the work of the late Dale Jorgensen, in particular at Harvard University. Our second panelist is Sherry Kong, who is a researcher at the Institute of Surveys, I think it's called, at Peking University. But it's also associated with the Institute of Digital Finance at Peking University, and is well placed to explore the subject that she'll address, which is the adaptation or adoption of digital technologies in finance, and in particular the use of digital technology in financial transactions, but also the use of digital technologies in financial servicing more broadly, and how that has succeeded and where it hasn't succeeded in China. And our final panelist is Yanrui Wu from the Business School at University of Western Australia, and he will look at the relationship between the digital economy and innovation in China in recent times. They will speak, our panelists, for 15 minutes, strictly 15 minutes. I get a tight chair and that, so that we'll have plenty of opportunity for discussion at the end of the panel. And I think we'll save questions. If there are burning questions, please raise them all the way through. But we'll save questions at the end of the presentations by the three panelists for open the discussion then. So first, let me welcome Yanrui.
Good morning, everyone. Is it working? Okay. Or maybe I just use this. I don't need that. Okay. So thanks, Peter, and thanks to Li Gang, and also for all the friends, Ross. So I'm happy to be here, and this may be my third or fourth time in the update of this 25 times updates. I am going to report a result specifically of focus on ICT industries, or you can call it digital economy. But compared to the rest of non-ICT or the rest of the economy, this is based on a data system. I will briefly introduce it. This is something I've been working on this since the time I was in Australia, in Canada. But gradually I've been working on this. So apart from reporting my results, I think it is to open up to the audience or the researchers a question. How should we understand the productivity from the digital economy, and also the declines of the efficiency or productivity in the rest of the economy, and how we compare the performance of the digital industries against the government efforts to promote digital industries. Okay, I guess I will skip some sections here. So I will strictly sort of follow the time discipline. Okay, so I would like to start with Dale Jorgensen's finding in his 2001 AER paper, and that is the first one actually to address the so-called Robert Solow's productivity paradox. So he convinced us with evidence that the US economy from the mid-90s actually to the end 90s, only something like a half decade, was indeed benefited from digital or ICT industries. This is 15 years later, 15 years after the productivity paradox raised by Robert Solow. And his findings soon confirmed by studies on Europe, on Japan, and later on Korea. So the advanced economies gain a lot, and particularly those industries connected to ICTs in terms of productivity and also as a driver of growth. Okay, from this, okay, so if we can recall the Moore's law, so there's two forces. On the one hand, the computing cost, you can see the prices declined dramatically. But on the other hand, that decline actually means that the market actually is growing very fast. And on the other hand, actually, the cost of the manufacturers to achieve these benefits has risen significantly as well. So, which strongly actually forces the investor to seek markets for output and input where profits are higher. So it has to be made, the decision has to be made very quickly because the price declines dramatically, right? So this explains not only the rapid development of China's ICTs, but also the rapid integration of China's ICT manufacturing in global value chains. Okay, however, China's GDP growth has been rather slow if compared to East Asia's experience for the same stage of development. I don't want to give the details, but I do have that kind of research. So basically, we can compare China's period up to, particularly up to from the late 90s to the time before the COVID. So roughly match the Japanese period from 1950 to 70 and the Korean and Taiwan's experience from 70 to 90. So both, so they all kind of 20 years. But, the Chinese GDP grows in some sectors very, very fast, but for the aggregate measure, it's not that significantly fast. So, and then even China's ICT industries have also played a key role in productivity growth like their Western counterparts. Another question is, so China's non-ICT industries must be so inefficient that they overshadow the ICT industries. If so, China must have suffered from a severe problem of resource misallocation, which challenges the government's industrial policies aiming to promote ICT and other high-tech industries. So we can recall the SOE reform. In the Chinese words, it's kind of a Dada function. It's promoting the big while liberalizing the small. This is from the mid-90s. Zhong Ji engineered this. But also, from then on, the small SOEs are gone, and the big ones remained, and they started receiving resources, not at that moment, but waiting for the period of WTO. So WTO is the golden period for Chinese economy. WTO is also the period that the government was able to support those big SOEs and also large government-connected non-SOEs. So therefore, to properly account for the role of ICT for digital economy in China's growth and the productivity performance, we need to consider both technological and institutional or policy factors. So how to do it? To properly address this research problem, one can neither rely on the traditional solo type growth accounting characterized by its aggregate production function or APF framework. So nor focus on the performance of one or few selected industries or products. This is because the impact of ICTs on the Chinese economy through market policies and the nature of the ICT technology, as I mentioned in the beginning, implied by the Moore's law, cannot be evenly reflected throughout the entire economy. The so-called structure changes in the already rapidly restructuring economy makes the ICT impact more complicated and far beyond what ICT industry's performance may imply. So the opportunity cost of any ICT-oriented industrial policies imposed on the rest of the economy should not be ignored. So if we do this, so that is missing in the assessment. So we have to consider the whole economy. So in this study, I adopted Jorgensen's aggregate production possibility frontier, or the APPF model. So it's the extension of the APF framework or the solo framework, but it's not a simple extension. So you can read the second point in the blue. I'm not going to read it. So you can follow the reference. So APPF relaxes the strong assumptions in the solo approach that all industries have the same production function and face the same factor costs. So and also in aggregating industry accounts. So because this new approach, APPF approach can integrate all industries. And then so aggregation is important, but in aggregating industries, it uses the countries index approach to avoid the classical index number problem due to the fixed weights introduced by constant price variation, and they use the DOMA weight scheme to take into account the input-output connections of industries. So this has now become very popular in macroeconomic analysis. So the network approach. So what I'm saying here is you cannot focus on several selected industries or several products. So you have to put them together. You cannot ignore any activities in the economy. You cannot only focus on the market and ignore the non-market. Education, healthcare, and the government. They are also very important. So I remember my long conversation with Jorgensen on this. So and so the point here is, how can you put everything together? So this is the approach that we can avoid a lot of classical problems. Now I think that this kind of approach is already mature. And the last point I want to mention that with prices matching all outputs and inputs, so primary and intermediate, it can also address the heterogeneity problem at the industry and the factor levels, and hence ensuring the theory implied constant quality indexing throughout. So this is also important, right? So I think for a long time, because of data problems, and many people are working on, say, if you're working on production function, and so you don't really inquiry, so what the meaning of the labor, the meaning of the capital. So there are many different kinds of labor and capital, and the question is how can you make them additive, right? This is the bigger question. Okay, so all right. I think I should move faster, right? So, okay. I'm not going. I'm going to speak about this. Right. Okay. All right. I'm not going to read through. So in our system, so we have economy-wide 37 industries. So this is full coverage at the 2 digits level of the classification. And for this ICT focused study, I regrouped the 37 industries into this kind of group. So you can see something like 10 also, right? Okay, so this is the table. So you can based on this to see what are ICT making the red frame, and also what are intensive ICT using, and then the rest. Okay. Okay, so let us see the counting results. So following the grouping, you can now follow the table. And this is 6 periods from early 90s to almost now, 23. So the top line is the growth rate. Because of this, the approach, we have prices, we can deflate for each industry, both input and output. And this is different from the official approach. So if you have questions, we can discuss later. And this is not the exact official growth rate. But still, the golden period is following WTO. It's almost 11% a year by this double deflation approach. But the recent 5 years is very slow. It's not official, something like 5 or 4.5. It's 3.7. Okay, the ICT industries produces and intensive users in manufacturing and services. So you can simply add them up because all these figures are additive, and then that will make the top line GDP growth. Okay, ICT is certainly a major contributor for growth. All right, so this is the chart. The height indicates the growth. And then you can tell that over time, we see China's growth is declining quite rapidly. But if you remember the time when China became more and more aggressive in industrial policy, so that is basically the period I highlight. Something like 10 years or 15 years. So this is the industrial policy enhancing period. But if you try to rate from the dark blue and the intermediate blue, so they are the ICT making and ICT intensive using industries. I group them together, so you can see that. So even if the growth is declining and they are in relative terms, so they are making the major contribution to the growth. Or they sustain the growth, actually more important than the rest of the economy. Okay, so this one is the factor contribution to China's growth. I'm not going to read this, so you can follow this chart. I think I'll finish this quickly. Right. So this is the factors, and then so you can I can tell you the ICT equipment is in the middle blue. I don't know if I can use this. Doesn't matter, right? So this kind of okay, the mid color blue. This actually is declining. Okay, so this one, so TFP. This so you can find the same groups for productivity contribution. You can still focus on the 3 groups in the red color frame. So they are also the major contributors, but not ICT using services. This could raise question. Okay, so the bottom 2 lines I would like to emphasize is a relocation effect of capital and labor. So that means that when resources move across industries, we see if this kind of a move has a positive or negative TLP effects. So basically, you don't see very good results for capital reallocation. Okay, so this is the what we see. This is the different industries contributing to TFP, And also the one in green color is total factor productivity, the total reallocation effect on TFP. So this is what we have. And so the numbers you rate from in this chart is the total TFP growth. So still the best was the WTO participation period, and then turns into a negative. Now the last one, I finished this chart and then we finish, right? So I constructed two indexes. And the dark blue one is the capital reallocation effect on TFP. And the light blue is the TFP, is the industry TFP, industry TFP performance grouped by DOMA. So to produce the aggregate TFP. What we observe here, you can see the opposite movement. So the question here is, so if the same industry policy, so that actually induce subsidies to some firms or industries, so that will reduce the cost of those industries or firms, and then so that push up TFP. But at the same time, that kind of industry policy misallocated resources. So those more productive industries may not receive the resources they want or sufficient resources. So overall, we see the effect on the total economy like this. So this is a very interesting observations. I think eventually the paper in the updated report will focus on the performance first and open up to policy discussions. So thank you very much.
We can return to the discussion we have had, especially on contribution of the ICT sector, the productivity growth, and then the driving effect of industrial policy on the impact of the ICT sector on productivity growth. Xiaoying, over to you.
Thank you, Peter. Good morning, everyone. Yeah, good morning, everyone. It's a true honor to be back at the China Update. Thank you so much, Li Zhang and Xiao, for having me. And today, next. So today I'm going to talk about the adoption of digital finance in China. So economists like to think about the flow of capital as the circulatory system of an economy. Is pretty much the lifeblood of the economy. But what I'm going to talk about today tells you what China has developed over the past 1.5 decades or so is even more transformative. It is pretty much a nervous system, powered by digital payment and operates on your smartphones. It's data-driven, it's real-time. And in fact, the system has evolved from a convenience to an essential infrastructure. And we are so embedded in this system that we have stopped and noticed it. So it's like the water we're swimming. But the system is really powerful. Think about it, hundreds of millions of people are coordinating their economic activities on this system on a daily basis for so many things at all scales, from your morning coffee to cross-border trade settlements. However, all these things do not necessarily entail inclusive growth, like what he just mentioned. The technology is there. However, does it really bring about returns, and who are the beneficiaries and who are missing out? So this is what I'm going to share with you today. I want to say the system is wide yet thin, meaning there is near universal adoption of digital payment, but when it comes to the use of advanced financial services, it is critically shallow. And I want to also explain to you why this is both a triumph and a challenge. And this is a collaborative work with my colleagues from Germany, Theo Gegepan, and also Ningtong Chen from Xiamen University. And we want to go beyond the general adoption rates and ask the two specific areas, questions in two specific areas. One is about coverage. So is there a digital finance divide excluding certain vulnerable groups? Second is more about depth. So does adoption stop at payment, or is it extending into areas where we can look at the growth critical functions, for example, investment, loan, insurance, as well as installments? And to what extent is such among the services that have been adopted, and what are the implications? And so let me yes. Okay, it's quickly the roadmap and just a little bit more background. So the landscape of China's digital finance is very much shaped by two giants, Alipay and WeChat Pay. Now, Alipay has offered a solution, third-party payment solution, to address the issues of e-commerce trust problems. And WeChat Pay, you can think about it, this is an app that leverages on social network and provide QR code payment via make it ubiquitous in China. And so for those who are unfamiliar with these two giant apps, you can think about Alipay as a supermarket for financial products, and WeChat Pay is like a social utility with payment features. And these two big giants, their rivalry has driven adoption of digital finance, but at the same time, they have developed a distinct ecosystem. And I will show you in a moment why this matters for both in terms of coverage as well as the depth of digital finance in China. And our study speaks to at least three strands of literature, both at macro level and micro level analysis. And just one quick word about our data. We use the China Family Panel study ensured CFPS, which is arguably the best micro level data and produced properly out of Peking University. It has a nationally representative sample with longitudinal studies, and it's freely available, bilingual for everyone to use. And critically, we have a customer model included in 2022, where we asked about usage of digital financial services. Yeah, this allows us to go beyond the headlines and look at individual level reality. Okay, let me share with you a number of the observations that we've made out of this analysis. First, the adoption is pretty wide. So at an individual level, we have 77% of Chinese adults are making digital payment on their phones. So all mobile payments at household level, this stats goes up to 85%. And these two giants dominate the landscape with WeChat Pay wins on the penetration front, and Alipay dominates on the more sophisticated transactions. And 66% of the respondents claim that mobile payment is basically their primary payment method. And it is also important to notice that at least 32% of our respondents say they are still relying on cash as their primary way of payment. Now, if you look into the look across the different sections of population, there is clearly, but I will summarize for you. Yeah, there is some disparity. So if you look at the rural-urban contrast, it comes down from 83 to 71%, and across the different levels of education. with pretty much universal coverage of poverty and above, down to 32% of those quite illiterate. And age is also a big factor. Basically, below 50 years old, you have the universal coverage, but improves sharply for those who are in the elderly group, and income also matters. So this seems to be more than just disparity, but some sort of systematic exclusion. Luckily, at the household level, things we can see families seem to offer a partial solution to this exclusion at individual level. So you can imagine a rural elderly who doesn't feel comfortable using his or her smartphone to pay will get help, will get indirect access from a family member who can use his or her phone to make this access. So the mobile payment usage adoption goes up to 85%. And at the platform level, so if you're looking at WeChat Pay and Alipay, the user behaviors are also different. The users on Alipay are distinctively more urban, better educated, and more affluent. But WeChat Pay is on the front of social integration, if you like. Now let's turn to the depth part, or the thin part, so to speak. If we look at the ones who were claiming they are using mobile payment as their main primary method of payment, even within this group, there's only 2/3. So overall, it's like 41% of the population I consider a high frequency user. And this high frequency definition is actually very relaxed. It's not stringent at all. We're talking about those who are making mobile payment at least once a day. And there's also the gradients that drops for rural and rural sections of the population. So rural users are 3 times less likely to use mobile payment on a daily basis. Yeah. So we can see if we use the frequency of use as one way to look at the depth is quite limited. And what's more alarmingly here is about the use of advanced financial services. And here we're talking about investment, borrowing a loan, using consumption installments, or buying insurance. All these things are critical for growth and for resilience. But if you use any one of these services, we will take that into account, that there's only 14% of the household. So this just shows you the household that actually make use of these services remains a very small minority. Yeah. And again, there's a platform level differences. The Alipay users are more likely to make use, 3 times more likely to use credit and insurance compared to the WeChat only user. Yeah, of course, they both platform users are the ones that's the highest. And doesn't it really matter if people don't make use of the services? So what? So we want to look at the welfare impact of making use of the services. Here we conducted analysis based on difference kind of method, and we can demonstrate that a borrowing loan actually boosts our household income by 12% on average. So this shows you it does matter, and there is a real gain in terms of making use of services. So then the question is, why the gap persists? Our analysis points to 3 areas. At first, your economic capacity matters. So if you have more income, you have more saving, of course, you have higher demand for investment and for other financial services. And if you have your business and you have with your entrepreneurship, you have a demand for credit service. And the other 2 areas that we are looking at are trust and literacy. And this trust is goes beyond your general trust. It is more about trust in digital finance, and that involves 2 aspects. One is about information. Put all your information there, so if you worry about your privacy, you are less likely to use it. But more importantly, is your fund trust. So if people worry about their fund safety, those who have doubts are 22% less likely to make use of these services. And in terms of literacy, it is both about digital literacy as well as the financial literacy. So understand what compound interest means can increase quite a bit of your likelihood of making use of these services. And okay, in summary, doing good questions. Okay, in summary, our assessment about the adoption of the digital finance in China is wide yet thin. So meaning there's a near universal adoption of digital payment, but when it comes to the use of advanced or more sophisticated financial services, it is critically shallow. And at individual level, you do observe disparity. Families offer some partial solution, but the gap persists. And the real gain is still only limited to a minority of the society. So what does it really mean? It means we don't need to worry too much about building infrastructure anymore. What we really need to do is to make the infrastructure safer and smarter. So if you go back to the nervous system kind of analogy, making a payment on your phone now is like a spinal reflex. So it's automatic, it's fast, it's simple, and we are pretty much on top of it. But in order to take full advantage of digital finance, you will need to make complex decisions as to whether you want to invest, whether you want to borrow a loan or buy insurance. These things are important for growth and resilience, and that requires complicated cognitive functions. And so for this, you will have to focus on building. I'm doing good at this, so that's you will need to build the pathways for efficiency, you will need to strengthen data governance and data safety, and you will need to enhance the ability of literacy, so digital literacy and financial literacy of the users, so that they can really navigate the system with confidence and with savvy. So all this taken into account is our effort where we can cultivate a better environment and policies, formulate better policies so that digital finance can really work for the society as a whole. Thank you.
I've got new comments later on. What do you think? The age that
No outlier.
Well, we need to do something about this. But also comparable studies in other countries that might be a difference to what being going on in China.
It's nice to be back to EU. EU is very special. This is really in place my career started in Australia. Since the legal issue for having me back to China there. Now, as my title implies, this is pretty much a review paper. I tried to add some new evidence. I know Peter is watching the time, so we'll not go through all the outlines. Very brief on background, actually, Peking had a very brief introduction to the topic. Yeah, some of you may be familiar with the recent announcement by the Chinese government, but the government ordered the National Data Mission, and together with the National Urban Reform Commission, they announced a digital economy action plan for 2025. Basically, the document emphasized the AI plus development, emphasized data as a critical production factor, together with additional production factor, labor and capital. And also mentioned a figure about the 10% of the GDP in relation digital economy. I think the legal mentioned the number that's more broad sense in the relation of digital economy to the national economy. To summarize the full document, basically it aims to build a digital China, digital society, and digital economy. I have this came along from Australian Financial Review, so it's pretty much saying he emphasizing the digital economy and data development as the theme of economic growth in China, here in Australia, same thing. In my chapter here, as I said, the periodic review chapter, I got some new evidence that I haven't quite finished the imperial part here, and then try to draw some policy implications. Now, this one is important as Egon presented a very broad definition, was very good. Basically, if you look at the literature, also kind of interchangeably used terms like digital technology, digitalization, digital transformation, but really they are slightly different. So basically the foundation, digital technologies are foundations. Then one step forward is the digitalization, but then digitalization is different from digitalization, is slightly different. And then of course the more advanced stage is digital transformation. That's the focus of this year's China update. I will go through very quickly is the digital transformation and innovation in the economy are mutually reinforcing because we need innovation to provide the technology for digital transformation. All digital transformation will reinforce or will enhance innovation in society. That's at least the idea case. And innovation is pretty much a classical topic that I used back in the centuries. The concept has evolved over time from the early days, pretty much associated with negative connotation. So it's called undeserved disruption. So now the famous term popularized by Schumpeter for the creative disruption, which is read about in academic literature, in popular press newspapers. And the topic is well documented in the paper, and there are many history papers apart from individual papers. In terms of the matrices, the popular one, the familiar ones from the input side, lots of focus on R&D, spending, and input for human capital. From the output side, we have parameters like number of patents applied and granted, or in scholarly papers published in academic journals and so on. So I don't have to go through this in details. Digital transformation is a more recent concept, so the literature is still expanding. There are already many review papers, but those papers tend to focus on a particular area, either from the perspective, for example, information system, or focus on management, or focus on medical science. Yes. I'm not going to go through this type of it. So, but there's definitely there's a holes in the literature. So basically, for example, concepts, different concepts are used inconsistently. There's measurement issues. In general, there's lack of theoretical foundation. That's really what we as scholars should try to push more in this area. And that makes it very difficult to compare the findings from different studies. So I can skip this on the how innovation lays the foundation for digital transformation, how digital transformation enhances innovation. First one is focus on one. This is recent review by this also. So the point I'm trying to make is basically they looked more than 2,000 papers, assumed dominated papers published in English, and more than half associated with Chinese institutions. And more than half of the papers are founded by Chinese resources. So that to reflect the importance of decent economy and development, as the previous house has mentioned in the presentation. So I'm trying to show you some numbers here. National numbers, this is like the bottom one is the home penetration pretty much saturated in China. Pretty much on average, everybody has two phones. I fixed line on mobile phones. So there's no for the problem. But then the leading ones, the technological sales ratio. So you can see dramatic growth particularly after they are done. I tried to come up with some composite indices to reflect the development as it's like pretty much growing gradually over time in the last 15 years. I did the same for innovation matrices in terms of inputs and outputs, and similar trend gradually going upwards. Now, if I plot the two together, you can see clearly co-movement in the indices of digital transformation and innovation. So, but I need further more rigorous work later on. Well, I haven't quite finished yet. But at the major level in China, it's very different story. You see huge disparity. I think that this morning speakers they talk about this regional disparity. Nationwide, I will see a lot of development, but at the regional level, huge. You see the high bars in the middle, this is the Yangtze Delta region, Shanghai, Zhejiang, Jiangsu, and then the rest of followed by the rest of the countries. In terms of software sales, those are the so it's relative constant, not the aggregate numbers, just the this is per capita. It's a huge difference leaded by Beijing, followed by Shanghai and then other regions. The same with the technological sales, which leaded by Beijing, followed by Shanghai. E-commerce same, and this one here I actually used this e-commerce development indices together with the inclusive digital finance from Peking University. You can say in my data, there's more different disparity, but from Peking University in digital inclusive digital finance finance indices, so less disparity, but still huge unbalance of development across the regions. So, but very last slide. I want to just summarize, as I said, Hungary finishing few. There's clear evidence of a core movement between innovation and digital transformation indices at the national level, but we also see a huge disparity. And those of us sitting in this room, most of us China, watch out China especially, we know there's a huge regional disparity in terms of economic development, and China has done a lot to try to narrow this disparity, unbalanced development. But according to the evidence I observed, this could be a new round, new source of unbalanced development if policymakers don't address it. Right? For manufacturing, for FDI, for organisms, it's a lesser issue. Basically, for example, manufacturing centers shift from coastal areas to the inland and then to western region. But digitalization is very different. There's no border. Whether it's going to shift or not, we don't know. So that's something I really want to talk to people in this room and to our participants. Thank you.
Thank you. We have 5 minutes for questions and responses to the panelists. Stimulated a lot of questions in my mind are resistant temptation to ask them. Ross, John, one after that.
Following Peter from your question, Sherry, what do we know about your national what's going on in China? But I'd like the 3 areas of it. Your brief comment on what we know about national comparison.
Respond to this okay. Well, I know only have very limited knowledge. I think that's definitely area to look into. Well, I think that China is somewhat special in the sense that it has bypassed the credit card and check. So compared to a very developed traditional financial sector, the transformation will be quite different. So But of course, China's experience will have a lot of implications for other developing countries.
This John Henry's story. Mark Bradley.
Look, I think pretty brilliant, great presentations. Thanks very much indeed. I don't say this as a criticism, it's an inevitable outcome, but of academic work that all three are basically pre-artificial intelligence. You know, the model have only become available recently. DeepSeek, I think, what 2023, 24, and now said to be China has maybe 3,000 models available to it, and the US many more. And this raises the question, for example, with Cherry's presentation, is AI likely to address this issue of being too thin? That is, will AI provide better tools for drawing people into insurance or more complicated financial issues, network and Harry, of course, the same results as in the US, that the ICT industry itself is making the most contribution to DFP. But will this change with artificial intelligence, or is there any reason in your view to expect that it would? Those kind of things I wonder you could speculate about.
Sure, you first, something quickly.
Thanks, John. I think that yes and no. Yes, to some extent, with especially with the industry. Obviously, with the aid of AI, the interface will be even better and nudging you into sophistication. So I think there will be a helping part of this. But no, meaning if you think about people are worried about whether it be safe, and people have a limited understanding about how to make use of it, and it's their money, real money, putting on the platform, and AI probably will only do so much. So I think there's certainly potential for that, but again, AI is a technology. How to unleash that potential also requires a lot of learning and experiment.
Right.
All right. Well, thanks. Yes, compared to the studies on the US economy, if we find a way the ICT industries definitely performed better than the others. But if you look into the industries, you do the comparisons and the productivity gaps, certainly much bigger in the China case. And at the same time, so if you take into account the policies, so that actually motivated my questions. But here is the intellectual challenge. You know, for the mechanism, you know, how this Charis work on the micro and also the policy forces, how all this eventually translate into the macro. We still need a macro measurement. Otherwise, we don't know what to do. You know, the policy management of the whole economy is such a big and complicated economy. We need it. But now is what I can say is this is still a very much underdeveloped area. When we talk about digital AI, this kind of things, and so we naturally look at one industry, one product, and then we are forgetting the rest. So even the recent party congress is something like officially saying that it's enough for the EVs. It's already huge subsidies and huge surplus capacity, and certainly you see the cost imposed on the rest of the economy. I think this is different from the other cases, the US case. And also the US case, I just one last point. And the Johnson found that usually, and also the Japanese colleagues, for developed economies, the factor reallocation effect, okay, for capital, so basically it's a positive, and for labor is slightly negative, but they're all not far away from zero. Otherwise, it's a big trouble. Not like the chart I show you. And for the labor market, certainly there's a lot of regulations. In US and particularly in the Europe, we see a negative kind of reallocation labor impact on KP. Not in the US, but this negative capital reallocation. Okay, so that's something raise questions. So if I take my data.
Okay, two last questions, I'm afraid, because we're running out of time after that. Peter, right after that.
Thank you. Thank you, Tony here. Thank you for the panel for the wonderful discussion. My question is related to Professor Song. You mentioned the word governance. Sherry mentioned the word regulation. So my question is, how will the international rules and regulatory framework keep up with the pace of the rapid digital development and technologies to counter or deal with government regulate cybersecurity issues, privacy, and also deal with the ethics behind AI to eventually build that digital trust. Thank you.
Well, I need to points. First, I think by nature the regulators are behind, right? Otherwise you wouldn't be able to have any innovation. Second point, so you have red tag things. The second point is that in the end, it's all about the delicate balance. You want to promote utilization, you want to unleash its potentials, but at the same time, it's about how you manage the risks. I think it's a huge challenge for the regulators, and whether AI will play a positive or not so positive role depends which sections of population you're looking at and your perspective, as well as how much we are aware of the potential damages as well as benefits as well. So thank you.
And last question.
Good morning. Thank you, the panel and the speakers for this morning. I have a very simple question. I'm not an academic, I'm just an ordinary mortal, if I could use that word. Now, we have given a lot of the details about the innovations, including the optic fibers and all these other devices we're getting. My simple question as a mortal, could you please tell me in simple terms, how would us, common people, benefit or get all these wonderful things to help our daily life? Thank you.
Well, I think that is pretty straightforward. Yeah.
Well, simple answer, we all benefit already. Particularly if you go to China and travel, you realize this, life becomes more convenient with this innovation and the digital technology. Maybe very briefly, comment on briefly. AI definitely can help, but I think it's good way or bad way. For example, when AI is building the search engines, it can help with the user. It's either in good way or bad way. The regulation needs to also have a conversation with the companies. I think in case China in terms of technology development moving ahead, but in terms of government regulation for it to happen. But Europeans are moving ahead in terms of regulation. Some people say it's overly regulated. The idea is the management team, they're working together, say using China as the expert place, you develop the regulation and the governance. But given the current situation, it will take a long time together.
I don't agree. Thank you to the panel very much. Welcome to the circulating conversation. There's a lot more questions.